Hello traders, good day to you all. This is Christopher Glen. Today it is the 28th of August 2014 and this is a daily market review for the current market status. Just to remind you what I said this at the beginning of this trading week. We were talking about a potential for a corrective pattern on the dollar index dropping down a bit. We were talking about the DAX crashing down. We were talking about the Japanese yen gaining strength in front of a lot of assets. I showed you a potential for euro versus Japanese yen, New Zealand versus Japanese yen for a downtrend movement, and we will check the charts in a second. Just want to say that since this morning we've received several announcements regarding the German market. And earlier this morning, we received good indication regarding the Australian dollar. I can tell you that at the beginning of the week, we've mentioned Thursday and Friday as the strongest days in this week. And until yesterday, we've received corrective patterns in front of all variety of assets, not all of them, but at the moment we can see indeed that liquidity is returning to the market. We can see strong movements on Japanese yen currencies, and I find this structure that we will analyze in a second very important for the close future, for next week or even until mid of September. So what I'm going to do right now, just mentioning the announcement that we're expecting to see later on, 1:30 p.m. GMT, we've got an announcement regarding the GDP report in the United States, unemployment claim in the United States. And again, I've analyzed the dollar index with you. My expectation from the dollar index is to drop a bit lower. We will analyze the target for this motion. I'd like to talk a bit about the structure that we're receiving from announcement like this. Usually what happens, say that I've got a chart over here. So we've got a chart climbing up. Let's try to sketch what's going on the dollar index at the moment. We've received 1, 2, 3 very strong long liquidized downtrend movement after that, and a fifth wave climbing up. So we've got a 1, a 2, a 3, 4, and 5. So from this area over here, we've received a pullback of 5 waves. Right now we're forming a bit more back up, climbing back up again, just a bit more strength on behalf of the dollar, but the expectation is the dollar to fall down toward the fourth level area again, and that's what I'm talking about, approximately 82 area, if I'm not mistaken. We will analyze that on the chart in a second. Just want to say that after this structure, I'm expecting to see a fifth wave climbing up. That's a larger cycles uptrend movement, and then I'm expecting the dollar to drop down. I've mentioned yesterday the potential regarding the weekly chart of the dollar index. I'll go over that again today. So let's go to the charts. Just pay attention to all the Japanese yen currencies. You can see significant movement down on most assets. Just that the gold at the moment is fluctuating because of the weakness that we can see on behalf of the dollar. We can say that the gold isn't really forming a pullback or impulse movement on the Japanese yen, but all the other currencies do. We can see strong liquidized downtrend movement. We were talking about the euro versus Japanese yen. Look at that significant downtrend movement very nicely. I can tell you that it's funny to say the euro is gaining strength in front of non-major assets, but in front of major assets we can see a bit of fluctuation level. It's gaining strength in front of the US dollar, but again in front of the Japanese yen we can see that the euro is losing significant strength. I told you that in terms of structure, it seems like the New Zealand is expected to lose less amount of strength than the Australian dollar. Therefore, I took a trade for the Australian dollar versus the New Zealand for a downtrend movement. Was a good opportunity to enter the yesterday's and today's rate. Long-term downtrend movement, that is my expectation regarding this specific asset, the Australian dollar versus the New Zealand. Let's go back to the dollar index. Dollar index again is showing us very nicely a fluctuation level. That's a 1 minute chart. Let's go to the hourly chart to look at the larger structure. So indeed we can see this pullback, 5 waves of downtrend movement. We can see this ABC pattern climbing up. At the moment, no question about that. We can see a great potential for the dollar to drop down. Just that what happens in announcements in terms of structure, let's talk about that. sometimes you'll see that instant reaction to an announcement. Let's say today, 1:30 p.m., we've got an announcement regarding the unemployment claims in the United States. So let's say that that indication is pretty bad for the currency. So we may see a pullback, strong pullback, liquidized strong pullback, reaching the 81.9 level. As I said, 82. That is the logical pullback in terms of structure measurements. So a pullback like that might appear instantly because that is a C wave. C wave can is an impulse movement. So we had, and I'm talking about basically I'm talking about the non-farm payroll announcement, which usually delivers a lot of liquidity to the dollar. We had a circumstance like that when the market is spiking down, touching the point, and then climbing back up again. So we will need to wait and see what will be the reaction of this asset. My assessment is that we will see downtrend movement on the dollar index, and then we will see the pullback climbing back up again. Again, I said that weekly chart is showing good potential for downtrend movement on the dollar index because we've received impulse movement and then an A wave, a B wave, and a C wave completing the structure. So I'm not expecting to see huge uptrend movement unless we'll cross the 84 level, but that's way higher than the current rate. So I can't really manage an opinion regarding that target. I consider that on the weekly chart, there's a great potential to see downtrend movement on the dollar index, weaker dollar index in the markets. Past last week we heard a statement on behalf of Draghi that he's looking for a potential to weaken the European section, and I've been talking about several circumstances regarding the euro. Just at the beginning of the week, I said that the euro versus the Russian ruble is expected. Euro versus the Russian ruble is expected to climb up in terms of structure. And indeed, we've received very nice, clean uptrend movement. I'm talking about a daily chart, not an hourly chart. Look at this beautiful image. We've received a pullback. First of all, we've received the uptrend movement over here, and then we had a pullback, an A, B, C pattern, and right now we're breaking the trend line on top of this structure. So the assessment is indeed that we're moving forward into a higher rate. I've closed this position already because I'm expecting to see a bit of pullback toward the support and resistance, that trend line, sorry, and then a continuance of an uptrend. So at the moment, I'm expecting the euro to lose some strength in front of non-major currencies such as the Russian ruble. But we can say that the Russian ruble is gaining strength, losing strength in front of the dollar and in front of the euro at the same time. So we can basically say that it's coming from the Russian ruble itself and not from the dollar or the euro. Regarding the gold, the assessment is to see a weaker dollar in the market for the next day or two until the end of this week. So the assessment regarding the gold and the silver is to see a bit more uptrend on behalf of these assets. We can see that generally we've got a completion of a structure over here that shows the potential for downtrend movement on the gold. But if we'll analyze the daily chart, then it doesn't seem like we're moving forward into a specific direction. We do have a downtrend movement potential on this asset on the daily chart as well, but again, we will need to wait and see what will be the reaction of the gold in front of expected weakness on behalf of the dollar. Traders, I'd like to wish you all the best with your trades. Have a pleasant day, and bye-bye.